Hey everybody, I hope everyone had a good holiday weekend last weekend, and hope you had a good trading week this week. This week's video is going to be about combining strategies. So I combine strategies to help get a piece of the bigger picture trade, okay? Many times when I attack a trade and I have a big picture time frame analysis and trade idea, I tend to become very impatient, and I end up most of the time covering way too soon, exiting way too soon, and I miss out on the big move, or I take a loss. So in order for me to satisfy my emotions as a trader, I have to apply basically two strategies, and it helps me one, put money in Hip National Bank while having a big picture mentality and not missing out on the rest of the move. So let's go over what that would look like here. The example I'm going to give is CTRM, but I have another couple examples that I can show as well. CTRM, I'm just going to show this one is because it's recent and it's on everybody's minds, but this actually happens probably at least in a good market. It happens several times a week, but in a slower market, you may get once a week, twice a week, or maybe twice in 3 weeks like it was in summer, but it happens enough. So let's analyze this real quick. So clearly on the chart, right here is the 5 line. Okay, without hindsight, not knowing this right here, you have a 5 line, clear resistance. To me, I also have a line at 450, and then also have a line at 4. So my lines on CTRM were 4, 450, and 5. Given that I do not trade pre-market, because it's just not for me. Some people love it. I'm not the biggest fan of it. I don't have a good intuition with it, so I avoid it. But I continue to try to get better at it, but I don't do it by trading it. I do it by watching. So, but anyway, so 4, 450, and 5. But notice this. I want you to notice this. Look at where we open. Okay, we open above the 4 line, and we open around, 425, about midway to there. So it doesn't take much for it to reach 450. On a gapper, you want the price to be able to extend. So I'm considering the first resistance to be around 5, okay? So what I'm going to do is I'm going to take shorts into the 5 area and risk a little above 5, okay? Now, let's break down what that looks like. Let's say, for instance, I want to short the 5 line. So 5 line equals first resistance. First, I always do that. First resistance plus, let's say we give it, at the open, let's say we give it like a more volatile risk, and let's say we give 30 cents. Like later in the day, you could use a tighter wiggle. During the market open, forgive me, I'm still getting out of these allergies. 30-cent wiggle. So what that looks like, and this was my plan. It's 5 line with over 530 is risk. So what I'm going to do is let's say that you locate like 3,000 shares of this. Okay, well, let's use a smaller number just to put it in perspective. Let's say we locate 1,000 shares. Okay, and my personal rule, this is just so that I'm more comfortable with it, I will use 1/4 size for 25% of total locates on front side trades. front side short trades, okay? And I know I'm having to go through a little bit of extra stuff here to really get into this combining strategies things, but it's going to make sense in a moment, okay? So what that means to me is that on these first resistance shorts, my max size per line equals 250 shares, okay? This is just to put it in perspective to trade small up front, okay? Ideally, you don't want to trade with the same size on front side as you do on the back side of the move, okay? So a first resistance short, to me, I will never put as much size on the first resistance as I would on a death line play, okay? I'm always going to go about 25%. It's just easy math for me. Alex, like, he uses 30% front side and then 70% back side. Or he uses 30% over VWAP, 70% under VWAP. You know, that's his front side, back side. To me, I use 25% on front side, so first resistance plays, and then I will go 75% up to full size on death line plays. So what I do is I use these to pad the wallet, okay? I use these to build a cushion. First resistance has a really high odds of failing the first time around, okay? And it can help you attain a really good average to begin to recycle off of this average, okay? And recycling for me is not like what Bao does. You know, his recycling is he uses shorts, covers a piece, holds a piece, but then starts to hit that line again if it starts to, like, let's say, you know, like you have a stock that goes here and then there's a line, he shorts a little like here and then a little like there, and then it pulls back and he's covering real quick right here, and he's holding a piece of these two, okay? And as soon as it pops back to this line, he's got orders to short again because he's anticipating that it begins to form a channel, okay? Because he's got the one good trade in his pocket that he covered down here, a piece of it, and now he's holding the core average, which would ideally be in this middle point right here. He's starting to recycle from that here and then here, and he's looking for this channel to form. If it doesn't form, he adjusts, you know, probably either going to take off half of what he's still holding if it breaks above like this area up here, and let's say this actually like continued higher like this, he's going to take off most of his position right there and hold a core piece from down here and then short again at the next line, boom, cover a little bit because his average is going to be high, and so anyway, so on and so forth. So, but for me, I combine these two strategies, the first resistance and the death line. One, the first resistance, this is my wallet pattern, okay? And then after that, we have death line, and this becomes big picture, all right? So this would be my front side trade. This becomes my back side trade. But in deathline plays, when it works out where I combine strategies, I'm holding a piece from the first resistance strategy working and then adding to the winner to full size using deathline, and then my average is much better. I can use a wider stop loss so that I don't get stopped out in all the chop, and it works to my advantage. So let's take CTRM for example, okay? During pre-market, this is what the chart actually ended up looking like, okay? So we had this big push form, or we had this big push, which put it on everybody's watch, pull back, push, pull back. You start to see a clear line here, and this is really what your breakdown looks like it should be. So what I'm doing is I have this 4, 450, and 5 levels on my chart, okay? Now, let's just kind of draw that out real quick so we can analyze it. So if we have a chart like CTRM, pushed, pulled back, pushed a little higher, pull back right around that same line, then push a little higher towards market open, a little bit of a dip. Now, I have, remember, 450 and then 5. Okay, this is 5, and this is 4.5. And then this is market open. Okay, 9:30. Since 450 is very close to the pre-market highs, I want to see this actually push through 450 towards the 5 line. Okay, so I'm going to have orders up here and up here. And so it pushes at the market open and hits that order, pulls back real quick. And here you have an opportunity to take a piece off. Now, when you do this, you're working this front side average, okay? So let's say, for example, this is what it would look like if you're doing this. If your max size is like mine, 25% on the front side, and you located 1,000 shares, we're just going to use small size to keep it relevant here. What you would do is you would have like 125 right here, and then 125 waiting up here. You want slightly below the line, slightly above the line, okay? And then you have your stop up there. So if it hits this first level, what you can do is, you have that 125, take 60 shares off right here. Take the quick profit. All you're doing is you're mitigating your risk. You're taking some risk off of the table on the pullback. Yes, it's small size, but this is how you build the wallet for front side moves, okay? Now, your next order is up here, right? So now when it pushes again, that order fills. Now you've got 60 plus 125, you've got 185 shares. So you've put a little bit of money in your pocket right here on this side. This is moneymaker trade right there, okay? That was a terrible dollar sign. Let me do that again. There you go, money. That's a win. You've mitigated your risk, and now you're bringing your core average up even higher because you're adding more size than what you currently have left over at a higher price. So your average being here, and you just covered half here, when you add here, your average isn't closer to here. It's actually closer to here because this is where majority of your size is. So now when it pulls back, you have a better average and an ability to take it off again. So let's say you take it off again, and now you got 185 shares, so let's say you cover 90 shares right here. Okay, now you put a little bit more money in your pocket right there, and now you're building this core position, okay? But there's one thing that I keep in mind at all times. I'm holding a piece always, unless my wiggle is broken. Okay, unless my risk is broken. If my risk is broken and I haven't gotten any abilities to take a profit, I'm just going to take my quarter size off and I'm good. It's fine. I'll continue to reattack at higher lines, but I'm not going to try to make this trade work. I'm just going to cut that trade, move to the next one. Okay, I always keep in mind that this is actually my death line. Okay, so really what I want is I'm combining my strategies now. I'm keeping in mind that I'm on the front side of the trade. I'm trading the front side of this trade. But I'm keeping in mind that if it breaks down in this line, I believe was like 370. If it breaks 370, that's backside. So what I want is I want to hold an average from this area up here. And actually what happens is it ends up actually just completely tanking from here. And it stops right around this level, okay? And then we get this bounce back to around 450. And then it just gets very, it starts to form these higher lows and lower highs, but it starts pinching. And we had VWAP curling up, you know, VWAP is looking like this, and then starts to do that right there. So everybody starts watching for this domino effect to happen. You know, you got 440, you got VWAP, you got 450, 460 area, and then it starts to do this. But Now, you're continuing to hold, and you cover more here, okay? You're covering more, or either a VWAP or something along those lines. You don't know where it's going to bottom out. Usually you want to cover at support, which would be like here, but ideally you're going to cover more. You're covering a piece when it dips back a little below your average, and then you're going to cover more at support, which would be right here, which is right at VWAP. So now you're holding like 50 shares, okay? You've covered the majority of your position. You're holding 50 shares, okay? But now, if it stops you out, you can move your stop to break even on 50 shares, okay? So now your average is up here. Now guess what? Your stop has nothing to do with the chart. It has everything to do with your average now, okay? Now, what most people do is they look at the chart and they go, okay, if it breaks this high right here, I'm going to stop out. Okay, that's fine. However, if it breaks this high, where is it going to go? We don't know. We don't know how high it could go. So that is why I end up using a break-even stop after I've taken a piece. So this would be like break-even. Would be right there. So now I would have a break-even stop on the remaining portion. And I'm just waiting to see what's going to happen. If I end up taking it out for break-even and I didn't realize this last little piece of my trade, whatever. But this is the piece that I hold. This is the piece that I hold to give myself a better average in the end, okay? Now, what happens here is there's a lot of volume that's at this level, which this level happens to be, happens to be me drawing really bad and getting Tourette's all of a sudden with my mouse. This happens to be 4, okay? And what we end up getting is we get this really hard snap like this. So now that we've having this really hard snap below 4, now what I'm doing is I'm now shorting into this little pop here at $4. That's the new death line, okay? Because it's very clear that this is broken down on volume. And I'm not using 370 as the death line now. I'm using 4. Because it's confirmed to be a clear level based on the breakdown and the volume on the breakdown, okay? We've talked about several times abnormal volume, but remember, I'm still holding a piece of this trade, just a tiny 50 shares. But now what am I going to do? I got a total of 1,000 shares located. I got a backside confirmation right there. Now, I'm ready to short 950 shares into this 4 line. Now, if you remember, $4 is now support on this chart. But look, it's also a level on the daily chart. So when it lines up like that, it's very powerful, which is probably why it ended up being key. And now that I'm shorting to full size, you got to go full size on backside. I mean, you can't just be like farting around because you think you're chasing it. You got to be swinging the hammer. This is when it's trading short on the front side with full size you're just being an idiot. You're trading a stock, a momentum stock, counter trend with full risk. I mean, how does that even sound intelligent? It doesn't. It doesn't sound intelligent. Even if you have like a 90% win rate, the one loss you take is going to eat your lunch. So, I mean, you use, 25%, 30%, 50% on the front side of the move. But when you get these pullbacks, you've got to mitigate the risk. You got to take it off the table. But you always hold a piece. You hold a piece, even if it's tiny, because now when I'm shorting 950 shares down here at a $4 average, and I'm adding to the winner, when I end up having like a 507 or 497 or whatever it is average, and I'm shorting more size at 4, my average is actually going to be closer like 405 or 407. or 410 or something like that, okay? Because I have a piece from up here. It's small, but my average is going to be better than everybody else's that's shorting this death line. So now everybody else that wants to use this risk or that risk or whatever, then I can use a slightly higher risk so that I'm not stopping out with the herd, okay? And now when it continues to fade, I'm going to start taking off in pieces at targets. Again, targets are prior support. So 370 would be a target. So 370, I would take off a piece, and it actually continued to just break down further below 370, and it literally never bounced. And so now I'm looking at the daily chart and going, okay, 350 is a line right there. So I'm going to have more targets around 350. The next level after 350 is around 3 to 325. I'm also going to keep in mind that green-red area, which was like 313. So I'm keeping all these things in mind, and I've held a piece of it for the bigger picture move to get a better average than the rest. You know, this doesn't happen every day. It doesn't work every single day. Sometimes you're playing the first resistance, and then all of a sudden it hits here and you're getting this, and then all of a sudden, you know, your trade falls apart and you end up having to take everything off, right, or you know, here for the break-even stop, and you're out of the trade. So now you don't have a core average. Now you're waiting for the backside of the trade, or you're playing higher up here. But you have options. You've got money in the pocket, and you've got the ability to play. That's how you can combine strategies. That's how you can hold a piece for the what if, and then add back to your full size down here when it's ideal for the trade to go in your favor. So take it easy, guys. Hope you enjoyed this one. We'll see you later.